Welcome back, accounting students. Hopefully during that break you were able to either get a glass of water or stretch a bit. Please don't stress, because remember, Mahesh is here to assist you with partnerships. Okay, right, so let's carry on with unique transactions. And what we're going to do in this particular segment is now look at the accounting equation. Right, so let's carry on. Remember guys, I need you to work with me while I'm reading the adjustments and while I draw up the ledger accounts when doing the accounting equation. So let's look at our very first exercise. Required, analyze the following transactions from the records of CC Traders in the table provided. CC Traders is owned by partners Craig and Candace. Right, so let's go straight into the transactions. And our very first transaction, partner Craig transferred an additional 200,000 Rand into the business's current account from his private savings account. Our table given, we've got to identify which account is debited, which account is credited, and obviously the impact this particular transaction has on either assets, owner's equity, or liability. So I like to quickly just say A is equal to obviously O plus L. Right, so let's go back to our transaction. Partner Craig transferred an additional 200,000 Rand into the business's current account from his private savings account. So obviously he is investing additional capital into the partnership, into the business. So my two accounts affected. The business is receiving money, so obviously bank is affected. Bank is my first account. And the second account, who is the business receiving money from? From partner Craig. So remember what I mentioned earlier on, we're going to give partner Craig his own capital account. So the second account affected is obviously capital. And here, guys, be very, very careful, because remember, you are used to doing accounts of a sole trader, and normally we just write capital. But remember now, we've got capital from either Candace or Craig. So make sure you write down the name of the partner. Okay, so in this case, Craig is contributing additional capital. Right, let's start off with bank. We're going to assume bank is an asset, because if it was a liability, obviously they would have mentioned that to us. So bank is an asset. The business is receiving 200,000. So obviously our bank balance, remember we are the business, right? The business's bank account is increasing by 200,000. So clearly bank will be debited. Right, capital on the other hand, owner's equity, and by Craig contributing an additional 200,000, equity is going to increase. Owner's equity is increasing by 200,000, so obviously here is your credit. Okay, you guys got that. So let's fill that in. So account debit obviously is our bank account. My account credit is capital. And please, guys, write down the name of the partner. Don't just write down capital, because that would be incorrect. Capital Craig. Right, assets, as we can see, our bank balance, right? Our assets are increasing by 200,000. And then obviously owner's equity, by contributing more capital, equity increases by 200,000. There's no effect or impact on liabilities. Now, what I often ask my students to do is quickly check that that accounting equation mathematically is correct. Because remember, guys, and I know you hate me saying this, but accounting is maths. Please remember that. So if I look at this equation and I quickly put an equal to sign, right? Can you see this equation in terms of maths does make sense. So if I look at A, right, if I look at the left-hand side of my equation, I've got a positive 200,000. If I look at the left-hand side of the equation, I've also got 200,000 plus 0, which is obviously 200,000. So can you see that accounting equation is correct? Always a quick glance, just in case you mixed up your plus and minus signs. Okay, right, let's move on to our next transaction. So the second transaction, we've got partner Candace decreased her capital contribution by 100,000 Rand. Right, so this particular transaction, once again, we're analyzing the impact it has on assets, owner's equity, or liability. So exactly what we did in the previous transaction, we're going to look at the two accounts affected by this transaction. So one account is obviously my bank account because there's a movement of cash, and the second account will be capital, but this time it's the capital account for partner Candace. So can you see why the names are so important, right? You've got to identify which partner is now decreasing their capital, which partner's capital account is now going to be affected. Okay, so let's once again start off with the bank account, right? So for some reason, Candace decided she's going to decrease. She is going to withdraw an amount of, what is it, 100,000 from bank. She's decreasing her capital. So immediately our bank balance, right? Remember the business's bank balance decreases by 100,000. So obviously bank is being credited. On the other hand, let's look at now what happens to equity. So capital, right? Candace is decreasing her capital. So obviously owner's equity also decreases by 100,000. And here's my debit. Okay, you guys got that. Right, let's fill this in. So account debit was obviously not bank. Let's fix that quickly. Right, account debit is capital. And again, remember, I'm filling in the name of the partner. This is where students make a mistake. They don't fill in the name of the partner. And account credit is your bank account. Okay, capital, by debiting capital, equity is decreasing by 100,000. And at the same time, by crediting bank, assets are decreasing by 100,000. Okay, and once again, there's no impact on liabilities. So as you can see, if I put my equal to sign, this equation is balancing. Can you all see that? Okay. Right, now what I want to do, guys, because this is so important, I just want to also include that at this stage, assume bank is a liability. So I know I'm just changing the transaction slightly, but I think this is important, absolutely important. So let's quickly erase the information that we have. Right, I just want to erase these ledger accounts, shouldn't take me too long. Okay, let's grab a pen quickly, and let's assume the transaction mentioned, bank is unfavorable. Okay, so in the event of bank being unfavorable, how does this now change? So remember, obviously, the impact will be on the bank account, and if bank is a liability, by Candace withdrawing 100,000 Rand from our bank account, remember our overdraft is now going to increase by 100,000. Right, so the impact, the change that this would have on the accounting equation, let's quickly grab a different color pen so that you all can see this, in this event, your liabilities will now be affected, where your liabilities will now increase by 100,000. Right, and as you can see, the accounting equation still balances. Let me just remove that so that no one's getting confused. Right, let's grab a pen again. So obviously assets, there's no impact, but if you look at equity and liabilities, obviously there is an impact. Okay, right, I just wanted to add that in because I thought it was important. Let's move on now to our next transaction, our third transaction. Partner Craig took merchandise with a selling price of 2,000 Rand. So let's just quickly underline that. 2,000 Rand for personal use. The business marks up their stock by 60%. Right, so obviously a partner is withdrawing stock. Obviously, drawings is affected, not a difficult transaction. However, please remember when you're recording this transaction, you are not using selling price, but instead you've got to calculate the cost price. Remember, when partners take stock, it is always recorded at cost. So not difficult for us to do that. Obviously, we're going to take our selling price, 2,000 Rand, and in order to get the cost price, I'm simply going to divide by 1,6, right? I'm using obviously the formula. You guys know exactly what I'm talking about. So let's quickly get our calculator out. Okay, so 2,000 is our selling price, and I'm dividing that by 1.6. Right? Please remember, guys, you can obviously take 2,000 times 100 divided by 160, but I'm just choosing a shorter method, and that gives me a cost price of 1,250. Right, so 1,250. Right, now that I have my cost price, so let's look at the two accounts affected. Right, so my two accounts affected with this transaction. Obviously, trading stock is one account, and the other account affected will be drawings. But exactly the way we did with capital, we've got to mention the name of the partner. So it's Craig who is taking out stock. Right, let's look at the impact on trading stock. So obviously, trading stock is an asset, plus minus. My trading stock, or the business's trading stock, decreases by 1,250. So here's my credit. And then drawings, we're going to debit drawings because equity is going to decrease, right? Owner's equity is now going to decrease by 1,250. And here's your debit. Okay. So let's fill that into our table. We've debited drawings. And again, I'm reminding you it's Craig. Okay. And then we are crediting trading stock. Okay. Trading stock. And the impact this has on our accounting equation, we've obviously, I just want to change the color of the pen, guys. So if we look at trading stock, our assets are decreasing. We've got less stock in the business, so minus 1,250. And then drawings, equity is now decreasing by 1,250. Okay, you guys got this. Just make sure you are working with me because, guys, the more you practice, the more you remember, especially when it comes to understanding. I don't like to use the word remember. The more you practice, the more you understand that particular section. Okay, right, I think we've got one more transaction to go. So let's look at our fourth transaction. Let's just look at the fourth transaction. There we go. Partner Candace is entitled to a monthly salary of 15,000 Rand. She withdrew her salary in March for the months of March and April 2021. Right, now immediately, the reason why I chose this particular transaction is students immediately want to use salary as an account affected. But remember guys, in partnerships, we only allocate salary at the end of the financial year. Now, does that mean the partners don't withdraw salaries during the month? Obviously not. They've got to survive, they've got to buy things for their family, for their home, and so on. They've got payments to make. So they will withdraw money from the business on a monthly basis. They will take that salary, even though we will only record this at the end of the financial year. So what happens during the month when they are taking their monthly salary? We use their, I can actually hear you guys, we use their drawings account. Well done. So that's exactly what we're going to do now. But before we actually use the drawings account, let's quickly calculate how much has Candace taken. So remember, she's taken the salary for March and April. So obviously, if her monthly salary is 15,000, she's withdrawn a salary for 2 months. So we're looking at 30,000, not 15,000. Okay, right, so 2 accounts affected are as follows. So your first account will be drawings, not salary, guys. Right, so drawings, and you got to again mention the name of the partner. I know kids really don't enjoy doing that because you're so used to just writing drawings, but remember it's drawings, partner Candace, and then we've got obviously bank because cash is involved, so bank is your second account. Right, so looking at drawings, again, owner's equity, and because the owner is taking something out of the business, equity is decreasing by 30,000. So we are going to debit drawings, partner Candace, and then our bank account, let's assume bank is favorable because we haven't been told it's unfavorable. So if you look at your bank account is obviously decreasing. The business's bank account is decreasing by 30,000. So here's your credit. Okay, so if we fill that in, I'm quickly checking that I didn't make a mistake. Okay, looks correct. So I'm debiting drawings. Right, so drawings is being debited. So let's just fill in drawings. Right, and again, the name of the partner, partner Candace. And account credit is your bank account. Okay, and then obviously the impact on the accounting equation by debiting drawings, equity is decreasing by 30,000. And then we've got assets that are also decreasing by 30,000. Okay, right, so that was the last transaction. But before we take a second break, I just want to quickly go back to if bank was an overdraft, how would this change? So remember guys, if bank is an overdraft, obviously bank is now a liability, right? So let's just change our signs. And our liability, we would now owe the bank an amount of 30,000 because remember, money is being withdrawn from the bank account. We don't have that money, right? Bank is in overdraft. So our liabilities will then get affected, and obviously your liability will increase by 30,000. Okay. Right, I think we've done quite a few transactions. We've done a number of unique transactions that impact on partnerships. Let's take another quick ad break so you guys can once again not stress, but rather stretch a bit. Go and grab maybe a glass of water, if you can, maybe a cup of coffee, and then we will come back, look at the last bit, and yeah, we'll take it from there. I'll see you guys in a bit.